Hello everyone, hope you all are doing well and welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to economics to personal finance with a focus on DeFi and yield farming as a wealth generation tool. So if that sounds like something that's interesting to you, do consider leaving a like and subscribing to this channel. If you're completely new to the world of DeFi and you're wondering how on earth people are staking their cryptocurrencies on decentralized protocols and earning a decent sum of passive income every single day, I actually have a free online course that's down in the description below. You can access that with a free trial of Skillshare, cancel at any time, and it will come at no cost to you whatsoever. We've also just soft launched our new Discord channel. Our Discord channel is a growing community of yield farmers who are openly sharing their alpha. And as you can see from this Discord channel, we have our YouTube updates, we have our investment thesis with some interesting topics that are being discussed, as well as some beginner resources. I'm currently also working on creating some premium content that's exclusively for the Discord channel. So do join the Discord channel and stay tuned for that. So with that shilling out the way, let's jump right into today's video. Today, we're really going back to revisit our stablecoin strategies, especially for all you low-risk yield farmers out there. In today's video, we'll be talking mainly about D3USD and DUSD, which are stablecoin pools on DarkCrypto or Darkness Finance, which just launched last week. So as you can see from these pools, we're earning about 39.1% per annum on just your usual USDT, DAI, and USDC in your D3 USD pool, as well as 70% APR, which is pretty high on DUSD, USDC. Now, DUSD is the fractional reserve stablecoin that has been developed by DarkCrypto or Darkness Finance team, and of course, we'll be looking at how that actually works in the following video and whether or not it is likely to hold its peg. Before we even talk about this Darkness dollar thing, which is currently trading at 99 cents and has been pretty stable around the $1 mark, we first need to look at its primitives or its predecessors. In this case, that would be FRAX. Now, for those of you who don't know, FRAX is actually a fractional algorithmic stablecoin, meaning that it is partially backed by collateral in the form of stablecoins like USDC, USDT, and DAI, and of course partially stabilized algorithmically, meaning that part of the market cap of FRAX is backed not by stablecoins but by other forms of collateral like FRAX shares and otherwise. So you can think of this a bit like a decentralized Tether. As we all know, with the whole shadiness around Tether, not all of the market cap of Tether is backed by real US dollars, but some of it is backed in so-called cash equivalents, which we don't know what on earth that is. It could be high quality bonds, or it could be random debt instruments that have credit risk ratings that are more risky than desired. So FRAX actually has this really simple explainer. I mean, it's not really that simple. I do have a more complex explanation of how exactly it works, but the long and short of it is, if FRAX is trading below $1, the target collateralization ratio increases so that every time someone wants to try to mint more FRAX, they need to actually back it with a higher percentage of actual stablecoins. And this helps increase the overall collateralization ratio of the protocol or the stablecoin, and therefore reduces the downside risk because that stablecoin is now backed by more collateral per piece. If FRAX is above $1, the target collateral ratio drops and the excess value distributed to the FRAX shareholders. Now, this is kind of exactly what's going on in Darkness Finance. They have said that they are pretty much inspired by the FRAX protocol, except that the non-stable collateral is now not just the NES token, which is the equivalent of FRAX shares in this ecosystem, but also the DARK token, which is their algorithmically pegged coin to CRO. So as you can see, this DUSD or Darkness dollar is considerably lower risk than something that is stabilized like a tomb fork, purely algorithmically with no backing whatsoever. The target collateral ratio now is 83.5%, meaning that each Darkness dollar must be backed by 0.835 of a stablecoin like USDC, USDT, or DAI. And that also gives us a downside limit to how much darkness dollar can fall, because if it goes below 0.835, it just makes more sense for people to use USDC to buy darkness dollar and then exchange it back for more USDC than they had put in the first place. And this is of course called arbitrage. And this little graph over here perfectly illustrates what has been going on. As we can see from the CoinGecko chart, the DUSD or darkness dollar it has fallen below peg in the early hours of today. And if we go over to this target collateral ratio graph, we see that in the early hours of today, the target collateral ratio has started climbing up, meaning that the protocol has decided that people will need to invest more USDC, USDT, or DAI in order to mint each darkness dollar, therefore raising the intrinsic value of this stablecoin. So as a summary, if we go over to farm darkness dollar and USDC in this DUSD USDC LP pool, this 70.62% APR seems pretty attractive given that CRO USDC pools are also paying about the same amount on Mad Meerkat Finance. And if you think about it, given that DUSD is 83.5% backed by actual stablecoins, and that DUSD only makes up half your LP position, then the downside risk is not very large at all compared to a CRO USDC pool. And therefore, if you're risk averse and if you're looking into farming stablecoins, DUSD USDC pools could potentially prove to be a lower risk way to earn these kinds of APRs as compared to putting them in a CRO USDC pool. Now that of course does not take the shine off this D3 USD pool, which offers a pretty high APR for standard stablecoins at 39%. If you have like a large amount stored on a ledger somewhere, you could just put it in here and let it earn these APRs. Of course, it is likely that this APR is going to drop, whereas this APR is more likely to stay at a higher level than standard stablecoins, simply because people view that this new coin, this DUSD coin, has a higher risk than, say, USDC, for example. But after all, getting these higher APRs is all about taking these risks where the risk premium is not yet priced in, and the risk premium that you're getting is likely to be higher than the actual risk that you're exposed to. All in all, I think this is a pretty good strategy for stablecoin yield farmers. Now, what about the degen yield farmers, those who are farming in the dark CRO pool, such as myself? I'm also farming in the dark CRO pool right here on DarkCrypto. Well, the thing is, DarkCrypto has mentioned on their Discord that they are actually setting up a boardroom, which is basically another smart contract, where holders of the Nest token or the share token in darkness dollar are actually going to be rewarded in dark CRO, meaning that excess collateral value from the DUSD protocol is going to be used to buy up dark CRO liquidity pool tokens to be rewarded to the Nest holders who are staking their Nest tokens in this boardroom. That actually provides some buying pressure for the dark CRO pool, which is likely to ensure that dark does not lose its peg from CRO and fall to zero. Another thing about this is that given that the DUSD stablecoin is partially backed by Dark, people who are looking to get into this ecosystem and minting DUSD from their stablecoins will need to purchase Dark, further increasing buying pressure on Dark and strengthening the peg of Dark to CRO. It has been over 1 month since I first released a video on being in this protocol, and we are still above peg and healthily sitting at 1.02. Now, if you want to know when I will exit DarkCrypto and know with a high level of confidence that the peg has been lost, I have a previous video that covers that. I'll link it in the card above, and do go check that out if you're considering aping into DarkCrypto, which is pegged to CRO, and you just want to accumulate more CRO like myself. So this has just been a short video explaining the new stable swap or darkness finance that DarkCrypto has released, as well as the yield farming opportunities on the DarkCrypto ecosystem. I hope you found this video informative and useful. If you like this video, do consider leaving a like and subscribing to this channel. With that being said, thanks for watching, and I'll see you in the next one.